August was our best month. We did 32. When you're trading, you need to have that conviction, that confidence when you're buying stuff. What you can't do is be hesitant. As soon as you hesitate, you've lost the deal. Anything I see that's a good deal, I'll still say yes to. And that could be 60 properties, it could be 20 properties. We probably on a week put out about 150 offers. It doesn't make any difference where I get the deal from. I've got multiple different channels of where I get deals from. I think that's the hardest part of trading.
Welcome to another episode of the Property Developer Show, the podcast. Today I'm joined by a good friend of mine, Saif, who you may or may not have heard of through the property trading space. What Saif knows about property or doesn't know about property trading isn't worth knowing. Saif, welcome to the show.
Thank you for having me on. I'm looking forward to getting a hat today.
Pleasure. Yeah, I mean, I think that's the only reason people come on, to be honest. But no, it's good to see you. Obviously, known each other now for 5-6 years.
Definitely pre-COVID, 100%.
Yeah,
and that's
definitely was, yeah.
At least 6-7 years now, I'd say.
Because you were already doing property trading of some capacity when I knew you, 6-7 years ago. How has that sort of evolved over, because it's become more popular now, of course, and people are talking about it more, and I think that's the nature of the market, but how has that sort of evolved through, obviously pre-COVID, through COVID versus now?
So property trading has been around for years and years and years. It's been one of these industries where people don't really talk about it. The people that do it make good money from it. They keep it quiet. They don't need to go and talk about what they're doing. And I would say within the last 3 years, it's been something that's gone a bit more mainstream, I'd say. Mainstream from a social media perspective, people talking about it for a variety of reasons. Number one, I was involved in basically, we have the Property Auction Hunters channel, which is basically all about buying and selling through auction. Brought a few people that talked about property trading through there. And then all of a sudden, people started to put a bit of a profile up on Instagram, LinkedIn, etc., about property trading, and started to think, okay, well, if I start to tell people about it, it could actually benefit me here for a various amount of reasons. Number one, which is people might actually see what I'm doing and then understand that what I need is stock. I need properties to trade, and they might be able to bring me properties to trade, whether it's sources, etc. It might be auction houses, it might be estate agents. It's basically having a presence so it can help you to either buy properties or those relationships when you're selling them as well. And I think that's really snowballed from there. And people that I know that are huge in property trading are now starting to go more onto social media, and you can start to see they've got a brand new Instagram with 2 photos, 3 photos. So I think it's starting to become a bit more apparent now, whereas before it was just ninjas in the background. No one knew who they were, what they were doing.
Mm-hmm. So where do you kind of put yourself in terms of, because I know obviously you've got like the national buying companies that obviously spend a shed ton of money on marketing. Yeah. You've kind of got the people that maybe do it on an ad hoc basis. Do you kind of put yourself at that higher end or kind of at somewhere in between?
So look, most people kind of have one strategy. So they are direct to vendor digital ads or direct to vendor non-digital, i.e. leaflets, letters, etc. Or some people are just, I only buy from auction or estate agents, whatever it is. I'm quite different in the sense that it doesn't make any difference where I get the deal from. I've got multiple different channels of where I get deals from. Direct to vendor through digital ads, non-digital, auction houses, sources, relationships, estate. I don't really care. It makes no difference to me where the deal comes from. I always underwrite a deal in terms of what I'll pay for it on an all-in basis. So I'm like, this is what I'll be at all in. If you want to put a fee in, you put it underneath that price. Whatever it is that you need, that's what I can pay. If you can't make it work, it doesn't work. But that makes no difference to me whether it's any channel that I'm getting it from.
Mm-hmm. On an average basis then, how many properties are you purchasing a week? Or deals?
Monthly. So August was our best month. We did 32 in August. That was a phenomenal month for us. And that's naturally because there wasn't as many buyers in the market. So we obviously bought a lot more in that market. Roughly we're doing around about 20 a month, I'd say. And that's anything from freehold to leasehold, etc. It could be anything. It could be flats, it could be houses, anything.
Has that kind of evolved, obviously, post-COVID? Were you kind of doing those that kind of level, or is that something that's gradually increased over time?
Definitely gradually increased. I'd say 2 years ago, I was probably doing about 4 or 5 a month. 2 years before that, I was doing 1, maybe 2 a month. So I think the volume's definitely increased, and I think it's a variety of reasons. Confidence is a big thing. So when you're trading, you need to have that conviction, that confidence when you're buying stuff. What you can't do is be hesitant. As soon as you hesitate, you've lost the deal, or people will kind of understand that you're hesitating, and then you start to lose relationships. Trading is all about being decisive, making decisions, sticking to it, no matter what happens. I've actively agreed stuff, then looked at it and thought, okay, I maybe agreed it too much, but still stuck to my word, still completed, and still had the same level of excitement and conviction, even though I know I'm probably going to lose money on this, because I've stuck to my word and I've kept the relationship going. So I think it's really, really important that you obviously maintain that by being confident in what you're doing. So experience is a big thing. Number two, I think as you start to build your capital stack and your capital pot, you can start to take a lot more risks with it as well. Because if you're using other people's money, you don't want to take as much risk. If you've built up a bit of a capital pot that's your own, you can start to take more risk. So that's kind of those two things. And then the third thing is just contacts. So you find a snowball when you're starting to build relationships. There's a 6 to 12 month lag. You can go out and say, I can't, I'm doing all of this stuff, I'm putting all the groundwork in, I'm not getting any deals, but it's 6 to 12 months later where that start to flourish. And then the more you transact with those people, the more they'll come back to you, want to sell more to you as well.
Yeah. How do you sort of find the kind of obviously you've got a bit of a beast in the sense of 32 transactions, no doubt you've got staff, you've got overheads that go into business operations, plus obviously paying yourself to be a director. How do you sort of find the balance with keep retaining enough money in the business that will enable you to take that kind of additional risk or buy deals that might be a bit quirky, versus then what you decide from a kind of operational overhead perspective, where you can kind of push that ceiling to for growth?
That's a really good question. I used to be in the mindset of only buy what you can afford to buy. The problem with that is if you start saying no to people, and even if they're good deals, because you're stacked, you're like, well, I've already allocated all this capital to all these deals, which, might be completing in the next 1 to 4 weeks. You start to say no to people. And when you start to say no to people for good deals, they stop sending you deals and they stop obviously wanting to work with you. So I kind of changed that a bit. And now I kind of say yes to anything I see that's a good deal, I'll still say yes to. And that could be 60 properties, it could be 20 properties.
And that's the Property Developer Show 2025 wrapped up. Across 5 shows, we've had over 2,000 visitors, 199 exhibitors, which is quite frustrating because we're one off 200, and 50 keynote speakers. If you missed out this year, we will be back bigger and better in 2026. We will be visiting 6 locations, starting in Bristol, then London, Southampton, Birmingham, Manchester, and finally ending in Leeds again. Register your interest on the website link in the episode description and be the first to hear when tickets go on sale. And I look forward to seeing you in the new year. One of the trickiest parts of running a successful property business is staying on top of your finance. From contractor payments to project costs, the numbers can get messy fast. That's why we've partnered with Tide. Tide is a smarter way to manage your business finance, whether you're flipping houses, managing a rental portfolio, or scaling your property company. With Tide, you can open a free business account in minutes, no hidden fees, send professional invoices and payment links, accept card payments in person or online, track expenses, and set aside tax automatically, all within the app. You can even add an expense card for your team as you grow. It's fast, clean, and built for the way property professionals work. And here's the kicker. Open a Tide account with our code PDS and spend just £100 and you'll get £50 cash back. Further information on how you can sign up in the episode description. T's and C's apply.
It's very, very difficult because I will have at any one point X amount of properties that are going to be completing, and that's sale completions that have already exchanged, which, as everyone knows, even if you've exchanged on it, it doesn't necessarily mean 100% it's going to complete. There could still be people that can't complete in time, etc. Plus, at the same time, on the purchase side of things, you can always get delays as well. So even though it has to be in 3 weeks or 4 weeks, there's never a guarantee that it's always going to be 100%. So I've stopped thinking too much about, okay, I need this capital for my pipeline. And I've started to think more about if I got to a situation where it was a bottleneck and all of a sudden I had 20 more properties to complete on for purchase, then I was going to get money back in from completions on sales. Who do I go to? What do I do? And I can tap into that. So I've got different options that I can obviously go to, whether it's a JV partner, whether it's people that I know that would just lend money, for example. But, so far I've been able to manage that. I've never got to a situation where we've been really, really tight on funds. And I suppose the other thing is, which is really important, if I'm trading, I'm also looking at my pipeline quite clearly, in the sense that what I don't want to be doing is thinking I've got so much I need to buy in, let me try and maximize what I've currently got. I need to get rid of them And even if that means selling it to break even, selling it at a loss, I need that capital to come back in. And that's really, really key. Whereas most people will be like, I'll hold on to it until it sells and I need to make a couple of £1,000 from it. Whereas I'm kind of like, get it gone. Just, I've got loads of properties to come back in, let it sell for whatever it sells for and move on, you know.
Is that something that you kind of developed over time, that kind of ability to just look at the pipeline and go, okay, like we might potentially bottleneck here? Or has that kind of been something that you've experienced where, oh, that's happened and now I know for future, you know, what's kind of thought pattern into that?
The most important things to me is the bank balance. So I check the bank accounts, all of them, every single day. I want to know what's coming in, what's going out. Not in terms of every single transaction, but just more in terms of where we're at from a capital point of view, plus the pipeline. That is the two most important things. And it is as a result of being at times where we've not had the capital to buy stuff and then thinking, okay, well, how are we going to complete on it? And you know, we've ended up finding a solution for that, whether it's JV partner, raising finance, etc. at the time. But it is very much, you have to keep your eye on the ball constantly. This isn't passive. This isn't what people think where they can go on holiday and just leave it to their staff. This is very much, I'm involved every single day, roll my sleeves up, you know, because I enjoy it so much and I love what I do. I'll do it any day, whether I'm away, whether I'm here, it doesn't really make a difference to me. I'll still do it. And I think if you're not involved in it, you're going to take your eye off the ball. You're not going to be able to trade. Simple as that.
Interesting. Okay, kind of going back then to just starting out, or at least with the kind of hindsight that you've got, I'm wanting to get into property trading. Where do I start?
So, look, property trading is probably the riskiest strategy out there from all of property, because when you're an investor, the market can forgive you, right? You might buy something, might pay too much for it. You can afford to leave more money in the deal and hold it for longer, etc. Development is quite risky, let's be honest, but also still you might be able to develop something, sell it and move on. Trading is where you'd most likely make a loss if you were going to be basically making a loss out of all the property strategies, in my opinion anyway. So it does come with risk factors. You've got to bear that in mind. What I think is really, really key is, first of all, understanding what trading is all about. So what's the different ways of trading? There's lots of different strategies within trading itself. So most people just think about trading from a point of view of buying and selling a property, but there's probably 4 or 5 different other strategies within trading you could do. Partly trading a contract on, for example, we mentioned overages earlier. There's lots of different ways you can actually trade. So understanding the basic knowledge and the concept of it, because then you can understand every deal that comes to you, how do you then structure that deal? So if you have limited capital, there's ways to structure it where you can obviously make a margin still and move on. If it is a case of, well, you like the deal, you think there's an opportunity for it to sell for quite good money, you'd obviously structure it another way where you can be able to buy it, sell it, have full control. But generally speaking, you need to make sure that you're understanding what property trading is, how to trade, how to structure the deals. The next thing is understanding things like stamp duty as well. So still, there's loads of people out there that all they understand is just residential stamp duty. And I think if you don't understand, there's lots of different exemptions, etc., that you can have as a property trader. Plus, when does non-residential stamp duty apply versus residential, etc., that will give you a bit of an upper hand. And then I think the third thing, which is really, really key, is either do one of two things. Either cut your teeth into a trade where you're not necessarily going to make money. You might break even, but that's still good because you've learned from it, if you're willing to take that risk. Or we've done something where we opened up a joint venture opportunity where we say to people, bring us the deal, because the deal's really important for us. We'll work with you on that deal. So we will take that deal from start all the way to finish in terms of joint venture. We will fund that deal as well. If the deal ticks all our boxes, we'll fund that deal. And then there's limited risk exposure from your side. And that gives people not only the exposure to being able to obviously trade a deal, but also less risk of having to look at the downside. If they do make a loss on it, then we take that loss on. Plus, they've got us looking at that deal for them as well, which is really, really important.
Yeah, I like that. In terms of, I suppose, your journey to become a property trader, you know, because I know you were buying to hold originally and had the development and then you started to kind of evolve into the trading business and then now just purely trade. What was that kind of process like for you and why did you transition?
So when we started out, 2017 was when we really sort of, set up the limited company. I'd say 2018 was when we first properly started to build out the portfolio. So let's say 2017 to about 2020, we built up 100 units in the portfolio. And that was very much go out and do the buying, whether it's through auction, whether it's through open market, traders, etc. Then obviously you're going to have to do some kind of refurb or add value to it. Then you're going to have to refinance it, etc., etc. The biggest variable when you're doing the buy, refurbish, refinance, as they call it, is the surveying, the survey at the end of it, the valuation. It's the one variable you can't control. Very, very difficult. And to be fair, within reason, we managed to there or thereabouts do as best as we can. Probably 85% of our revaluations on that 100 unit portfolio have come in spot on, which is good. But I think we got to about 100 units, and I thought, where do we go from here? So we either go to 1,000 units and try and go really big and go maybe like REIT level or sell to a REIT or spin off or do something to that level. Because I was always going to be ambitious. I wasn't going to be like, let's get to 100 and stop. So I was either going to go do that, or I thought, let me keep what we've got. No need for going out and building any further and do something else and pivot. And at the time, we were working with lots of traders. So similar to myself, I would go to other traders and say, we want to buy this kind of stock. It's for buy, refurbish, refinance. They were making a margin, so they were buying it at X, selling it to us for Y. I had no problem with that. They could do whatever they want as long as the deal worked for us at that Y number. Couldn't care less what they paid for it. It's always nice to see afterwards what they paid for it, but couldn't care less in all honesty. And I don't know why some people just get really wound up by the fact that if it's a good deal, they are so wound up about how much someone's bought it for. And it's like, that shouldn't really matter. If someone's got a really good skill set of buying deals at the right money, you don't go and say to Tesco, well, you've bought this carton of milk for 10 pence. Why are you selling it to me for £1.50? It doesn't really make a difference. That's what you can buy it for. It's there. Anyway, so coming back to my point, I then decided investment. I enjoyed the buying side of things, and then I hated all the asset management, etc. So I thought, well, let me go back to those same people. Let me try and buy stuff to trade. And I bought a few bits from them, traded them, made a bit of money. And I thought, okay, some traders actually leave money on the table as well, which is fine. That's how it is. And I thought, okay, I'm enjoying this now. So I'm buying something, I'm selling it within 3 months, getting the money. I don't have to then think about setting up all the systems and processes for that property internally. And it just went from there. That's kind of how it started. The Boris bounce back in early 2020 meant that a lot of the traders got greedy because the market was doing quite well. Mm-hmm. You could sell anything and it was making money. Stop selling to us, stop trading to us. And I thought, well, we need to do something ourselves here. And then that's where our cash buying business, Property Buys Today, was born. Just thought, if you lose control, take control and do your own thing. And that's what we did. We set up our own cash buying business then.
And now you're here.
Now I'm here.
Unfortunately.
Yeah, fortunately.
So I guess for, I suppose, the listeners that may be, looking at property trading as an alternative to different methods, particularly, and I think it's become more popular, particularly as like the flip market is really difficult. Yeah. The market's quite stagnant, and which is, I suppose, is creating opportunities from a trade perspective where people need to move instantly. They need the cash or, whatever else falls into that. And it's a tough market at the minute. So maybe people are kind of looking at it from a casual basis.
Yeah.
You're full-time versus someone that maybe wants to do 1 or 2 deals a year. Where can they start to really look at maximizing their chances of opportunity?
So look, don't just look at me and think, okay, that's too far-fetched for me to be able to get to. I think the beauty of property trading is it can form part of your strategy. So if you've got a pipeline of deals that's going to go for development or investment anyway, well, maybe start looking at that pipeline first and foremost. Is there anything in that pipeline you can start to look at trading, right? Because the beauty of what you can do is, well, let me try and trade it. If it goes well, great. If it doesn't, worst case is I was already intending to use that for investment or for development. So you've got a worst case scenario there. Whereas for us as traders now, we don't have our worst case scenario is we'll make a loss and move on. So I think that's an advantage that people at a smaller scale that are currently doing investment or development can start to look at, is their current pipeline. And then beyond that, it's just more, well, how can you scale up your pipeline? Because a property trade will definitely pretty much work for an investment or development anyway. Because if you've got enough money to trade it, that means someone's willing to buy it, then spend the money and then obviously refinance it or develop it and sell it. It should give you more than enough margin. So I think being able to build up a pipeline for trades and then using some for investment, some for development, or just using more for trading works quite well. It's then just going to be a case of, right, well, how do you start building up that pipeline? And that's I think that's the hardest part of trading, is building up a good enough pipeline of good, solid, tradable deals.
Interesting. I think it's just having that part of your arsenal, isn't it? If you're kind of doing it on a casual basis, it's, I suppose, being able to look at a deal and say, okay, does it fit what I'm currently doing? Can I flip it? Can I do an overage? Can I put it into an auction?
Just understanding how to structure it. And look, I do think it all starts with the deal. So I think it's very much a case of, well, working the numbers backwards. Does this deal work for trading? Or if so, great. What type of trading strategy should I use for it? And I think that's what people need to start looking at, is not only does it work for trading, traditionally buying and selling, is there a strategy where it's not got as much margin for trading, but I can still sell it and make some margin on it? And I think that's the key about property trading, is understanding that there's multiple strategies within it to be able to structure a deal.
What's one of the biggest mistakes that you've made trading property?
That's a good question. One of the biggest mistakes I've made. I think sometimes as a trader, especially in the early days, you can become a motivated seller as well. So as much as we work with motivated sellers to buy their properties from them, as a trader, you can become motivated. And that's for a variety of reasons. That's because you might have bought a property that has a occupier unknown, for example, where the bank's repossessed it and the actual person that's been repossessed is still living in it and causing a nightmare and a nuisance. And you try and sell it and you can't get out of it. And then it just starts to spiral and you think, this is causing me a headache. And then you become motivated to sell it. I just want to get rid of it at all costs. And that's quite a big mistake, because I think as a trader, and that happens to, I'm sure every single trader has been through that at some point. But as a trader, you need to hold your nerve and you need to think logically, not emotionally. You need to figure out, right, well, I've tried to sell it. This is the situation I'm with. How do I now take a step back and figure out the best way to get rid of this, but without actually fire selling it, for example? Another situation you might be in is you might buy a property that's, I don't know, falling down, for example, and by the time you've completed on it, it's way worse than you thought it was initially, and it's only getting worse, but day by day, I don't know, parts of the brick might be falling down, parts of the roof, whatever it is. And I think the longer you are in that trade, the worse it's going to get for you and the lower the value of that property is going to be. And again, you might be a motivated seller. So I think for me, the biggest mistakes is becoming a motivated seller. I've learned that pretty early on. And then I basically, everything that we do now, it's all about trying to look at stuff from a big picture point of view, not make any quick rash decisions, take a step back, and tomorrow's another day, figure it out tomorrow. You don't always make a decision on the spot, because I think that's where you start to make emotional decisions.
What's your kind of methodology looking at deals? Because I know you put on social media, I think someone said, there was no issues with the property, and you went on Google Maps, spun it around, and there was a river next to it that was basically breaking its banks almost.
Pretty much.
So what's your kind of methodology to go into, because I'm assuming you don't view those 32 properties that you did.
No, don't view anything that I buy. No intention of viewing it, no interest in viewing it. I work on a numbers basis. So, every 10, 15 properties, I'm going to have one property that I've not been told about a certain problem, whatever. It is what it is. You take it on the chin. You've made enough money from the other properties. Whatever the situation is, you deal with it at that point. It could be Japanese knotweed. It could be structural. It could be there's a river next door to it, whatever. But generally speaking, I'm looking at, obviously you want to look at the Google Street View, generally trying to get an understanding. Is it next to commercial properties, pubs, blah, blah, blah. Just understanding whether it's remortgageable if someone's going to be buying it. The second thing I think you want to try and understand is, values. So what's the value of that property? Is it quite a quirky property where it's like a 1-bed cottage, thatched roof, grade 2 listed, or is it more like 3-bed semi in a pretty suburban area that's got easy access into a city or something? So I think once you start to establish the property type and what you're actually looking at, you can then start to figure out the numbers and then start to work back from that. And I think the third thing is just understanding, who is the buyer for that property? So is it an owner-occupier? Is it first-time buyer? Is it going to be an investor, a developer? Because if you've got a property that's tenanted, you're very limited to investors, not developers, not owner-occupiers, etc. If you've got a property that's vacant, but it's a small little 1-bed cottage somewhere, most likely, again, it's going to be an investor, right? If you've got a nice 3-bed semi in the middle of Birmingham, that's going to be owner-occupier territory. So there's more emotional bidding involved in that. And I think those are the best deals you can get, is where there's an emotional bidding in that. And anyone here listening can think back to, I'm sure someone at some point has wanted to buy their own property. When you call up the estate agents for that one property you want to buy, whether you wanted to buy a rundown property, whether it's a good property, it's hard to get those properties. Those properties in good prime areas where they're ripe for development, have a nice plot, etc., very difficult, and people will overpay for them. So if you are struggling to buy it, what do? Emotion kicks in, trading goes out the window, and I've been through it myself. And then you start to think, right, well, this is not about numbers. This is the only house I've seen in a quarter of a mile that's come up that ticks all our boxes. I want that property. I'll overpay by 20 grand, 30 grand, whatever it is. I think it's the same thing with auctions. You are buying something that someone else is probably aspiring to live in at some point, and that's where emotion gets the better of them. I want that property. So emotionally, they're bidding on it, not because of this is how much the prices are in the area. And also you'll find most people will really overspend on it and go way above what the actual ceiling price is in the area. They don't care about that. They're not selling, they're buying to live in. It's different. It's an emotional decision.
I've just been through that process, buying new residential. And
where'd you buy it from?
Through Rightmove, just an estate agent.
Was it run down that it needed work, or did you buy it ready-made?
Little bit of work, but it's like an ideal sort of a long-term purchase, this one is. So it was kind of a bit of an emotional decision. But when I have my investor hat on, I'm like, I'm overpaying for this. But then when I've got my residential hat on, or owner-occupier hat, I'm thinking, I've got quite a good deal there. I got it for a good price. I'll probably have a little bit of equity in there, but it's not a flip.
And that doesn't matter, you know. When I bought my first house, I remember very, very clearly, I overpaid for it. I mean, the refurb that I think it was the estate agent at the time, they had factored in 40 grand below what it should sell for in the open market, right, done up. I ended up spending 120 on it. I mean, I spent 40 grand just landscaping it alone, which is dead money. It's gone. Doesn't really matter. And I thought, okay, I'm completely in the shit here. I ended up selling it for 50 grand more than what I was in for it. And I thought I was in negative equity when I spent that 120. So I think also, you know, yes, it's an emotional decision, but if you do something and it's in the right area and it's the right price, and it's the right condition, you'll get the right price for it as well eventually.
Yeah, no, definitely. I agree. I mean, yeah, I'm probably not going to move out of that house for 10 years. So it's, probably going to go up in price during that time. So naturally. But I suppose kind of leaning on the trying not to become a motivated seller, and I suppose based on what we've just spoke about there, you know, what are the kind of mindset and traits that go into making a successful property trader? Because you've got to have some nerves of steel, you know, to go into those situations, I guess. Yeah,
good question. First of all, let's go on to the motivated seller side of things first and touch up on that. So a lot of people say B&V, it's all bullshit. There is no such thing as B&V. It doesn't exist, etc. And the reality of the situation is it's all about timing and circumstance, right? So the reason why our whole industry exists is speed and certainty. Simple as that. We have a very, very outdated property transaction system in the UK, hugely outdated. And couple that with the fact that we just have people that are non-committed. People hate committing. You know, I'll offer one day, 6 months later, I'll pull out the deal. There is no commitment to that process. There is always an industry where there is people that need to sell quickly. And it's not about price, it's about speed and certainty, right? So I think the key is try and put yourself in a situation, genuinely, have a think about this. You're asset rich, you've got an asset, you have no cash whatsoever, okay? You're overstretched cash-wise, but you've got an asset. No mortgage on that asset, completely unencumbered. You get into a situation where HMRC comes knocking on your door, I need 40 grand for your tax bill last year. You've got no cash. And if you don't pay it within X amount of time, you've gone over that period. You're now at a point where they're going to take you to court, whatever it is. Right? What do you do in that situation? You need to sell your house. You need to sell, liquidate whatever asset you've got in order to get the cash. And you don't want to go open market because that's 6 to 9 month process. 1 in 4 of those now transactions fall through. It used to be 1 in 3, now it's 1 in 4. Non-committal to the process. Auction is a bit more difficult because you need around about 1 month run up to the auction. The auction might be next month, so that's 2 months away. And then a month for it to complete and there's no guarantee, so that's 3 months away. And then you've got the cash buying route, which is basically people like us, where you'd come to us and say, I need this gone in 7, I need my money in the bank in 7 days or 14 or whatever it is. And that's why our market exists, is because there is a need for it. Now, put yourself in shoes of someone else who, I don't know, maybe, for example, has a tenanted property. So if anyone's listening, I'm sure you've gone through problems with your tenant's not paying. You've tried to go to court. You've not got all the paperwork sorted. You can't get that tenant out. That becomes a problematic property for you. What do? Can't put it on the open market. You're not going to get a buyer for that. And that is a specific type of property you can't sell. You can go auction, but you're going to get a lot less for it in auction. And there's obviously a lot more risk we're putting into auction. So again, people come to people like us. So I think our industry, first and foremost, exists because of the requirement for speed and certainty. And also sometimes it's just discretion. People don't want other people to know they're selling a property for whatever reason. So that's why our industry exists. That's the mindset that you get with a motivated seller. And that's where people say, if you look at a survey, anyone that's had a Red Book, Rick's survey, it always says 180-day val, 90-day val, 4-week val. And there's always a difference in price. And that's because if you want a 4-week valuation, it's a lot lower than what the market price is. And that's what the word BMV has come out of. It's below market value price, but not necessarily below what its price should be on the 30-day. Does that make sense? So I'm just kind of explaining that for everyone listening. Now, getting into what a trader's mindset should be and what you should have as a trader. So the first thing is you need to accept losses. That is the first thing I'm going to say. It's a type of professional gambling. We can say that, but where the odds are stacked in your favor, and you've got background knowledge into the property, to values, etc. So in theory, you've de-risked it as much as possible, right? So it's almost like gambling, where you are the house, not playing against the house in a way, where you know what you're doing. So I think the real key is making sure that you know you're going to have to take a loss at some point. And knowing that and getting out of stuff quickly is really, really important, number one. Number two is being able to build quantity of deals, because if you have one property and you make a loss on that, that's 100% loss. You have 10 properties and you make a loss on one, that's 10% loss. So I think volume reduces risk, which is really, really important. And then I think the third thing is just being able to build relationships. So it's really important, whether you're buying from someone or whether you're selling with someone, you have a relationship with them. So if you're selling through an estate agent or you're selling with an auction house, having a relationship with them will help you a lot more than just going to any old auction house and saying, I want to sell with you. Why? Because they might market for you better. Why? Because they might prioritize you to try and obviously fit you into their catalog that month. Whereas that could be maybe someone else that would say, sorry, you're too late. You need to go into next month's catalog. So it's just trying to understand how to build those relationships. And one of the most important things that I've seen is, if you're going to buy from an estate agent or an auction house, you need to give them something back. And that could be, next time you go to sell something in that area, give them a property back to sell for you, or next time you're going to sell a property in auction in that area, thank you very much. I bought 2 properties from you, just to let you know, that's why I'm deciding to give you this property over someone else. And that goes a long way. People don't realize that, but that goes a long way with estate agents and auction houses.
No, I bet. It's sort of relationship driven, isn't it? 9 times out of 10 in this industry, it's very much not what you know, who you know in most situations. And that obviously takes time to develop that and build it. So just kind of on that sentiment then, are you in a position now where I suppose your marketing sort of strategy is cookie cut and sort of relationship driven?
Yeah, so again, we've got the direct to vendor side of things. Very expensive, very costly, but the best deals you'll ever get comes through there. Auction houses, we buy a lot from auction houses, whether it's traditional auction, modern method, makes no difference to us. We probably on a week put out about 100, 150 offers a week. So it's very, very time intensive. But it is very much a case of, you put out 150 a week, you might get 5, 6, 7 properties out of that.
Wow.
That's the numbers game that you work in. And I've had so many people that would speak to me and be like, how do you get those deals agreed at that price? And it is very much a case of, you need to whittle it down to the very, very motivated vendors. And by going on Rightmove and just identifying stuff, you could be identifying a great property for auction trading or open market trading, but how do you know that's going to be at the right price if there's no motivated vendor at the back of it? So that's key really, in terms of, just putting out offers constantly every single week regardless. And I think the other thing that we have started to do within the last year or two is there's a training that we do. So I've started the training in 2024. I'm very full-time in my business. I really don't have time. So many people have asked me for mentoring, etc. I just don't have time to do it because I'm very much in the business and locked in on the business as well. It makes us money. and that makes sense for me. I'll make way more in trading than I'll make mentoring someone. I did do mentoring, I think, last year for 2 people, and that was about it, and I finished that. But what I did do was we set up the Property Trading Academy specifically because I wanted people that will bring us deals, right? And I thought, so many people bring me so many deals, and it's just a lot of them waste my time. There's no motivation on the back of them. They don't work for what I want to try and do. So I thought, well, if I teach people how to find stuff, what I want them to find, and then how to price it, I can then filter a lot of that through, and then people will bring me stuff that I know will work, you know? Mm-hmm. So that's meant that now out of the 10 deals that people bring to me, 4 or 5 of them work. Whereas before it was like 10 deals, actually 20 deals, probably one of them only works. So I'm teaching people how to find deals, how to structure it, how to trade. And look, some of those people are going to go on and trade on their own, and that's fine. But there's a lot of them that have that collaborative mindset that think, okay, I want to bring the deal to you. A, you're going to fund it, you're going to bring the money in. But B, I know that obviously you're going to help me de-risk this deal as well. So that's what we're doing. It's a very collaborative type of thing. No one else is doing that out there that's set up the training with the joint venture on the back of it. And we say to people, we'll only JV with people that come through that, because then it reduces the amount of time we have to look at deals effectively.
Amazing. So one key bit of advice, kind of looking back, connecting all the dots with obviously, you know, what you've done over the last 5, 6 years, what key bit of advice would you give to somebody who is looking to get into trading, or maybe is in it and maybe needs that kind of push to go to the next level?
Okay, so look at what resource you've currently got, okay? And resource is time, experience, money, simple as that. And then collaborate with other people that might have the opposite of what resource you've got. So if you've got time and experience, collaborate with someone that's got the money if you don't have the money, for example. And I think having that collaborative mindset of, I've got this in terms of, you know, experience, skill set, money, etc. And then this person's got this, try and collaborate with them. And I think so many times I see people not wanting to collaborate in this industry. And I think that just is the wrong mindset to have. Everyone wants to try and be competitive. And there is a nice level of competition, but unless you can collaborate, you're not going to be able to go far.
I think that collaborative piece it enables scalability. And I think in the modern world where everybody is so connected, if you're not collaborating, you're definitely full. I think that's an old mindset that people,
100%.
And I think if you're trying to operate a modern business, you need to be open to collaborating, because the market, there's so much business to go around. The market's big enough for it.
Totally agree, 100%. And even I've collaborated with some of the biggest traders out there, and I've got no problem with that. So I think, yeah, don't be afraid to do that, 100%.
Amazing. Good stuff. So if people want to maybe look at the training academy, or they've got a deal, or they just want to reach out, how can they go about doing that?
Yeah, so I'll send you the link. So we have reached capacity for this intake. I think the next time we'll probably do it is going to be March 2026, to be honest. But I'll send you the list, the link for that. And then obviously if people want to join that waiting list, then they'll be notified as soon as possible. And also drop you my Instagram. Instagram's the best way for people to get in contact with me as well. Super. Very active on there. So look forward to anyone wanting to connect on there.
Great stuff. Thank you for coming on today.
Cool. Thanks for having me, Scott.
Pleasure. Obviously, a great episode there, particularly from a trading perspective. I mean, you know, Saif has been there, done it, got the t-shirt in a lot of respects. And I think hopefully you've had some good insights to, I suppose, the different levels of trading. And if you're on that kind of casual basis, maybe just having it in your arsenal to use. But if you're wanting to reach, obviously, Saif's sort of level, then obviously there's a lot of work that does go into that. As I always say, please do like and subscribe, and we'll see you again soon. Take care. Bye-bye.